If you put $10,000 into Nvidia at the start of 2019, you would have over $230,000 today. That's not a typo. That's a 23x return in just 7 years. But here's the question everybody is asking right now. Nvidia just hit $5 trillion in market cap, the biggest company in the history of the stock market. Is it too late? Did you miss it? I'm going to answer that question honestly, and then I'm going to show you where the real opportunity is hiding right now, while most investors are still focused on Nvidia alone. Stay with me, because by the end of this video, you're going to see this moment very differently. Let's start with some context, because most people don't actually understand how Nvidia got here. In 2019, Nvidia was a great company. Gaming chips, some data center business, a promising AI division that nobody was really paying attention to. The stock was around $6 per share after adjusting for splits. Then ChatGPT launched in late 2022 and everything changed overnight. Every major tech company on the planet suddenly needed Nvidia's GPUs to build AI. And Nvidia was the only company that had them at scale. The numbers are almost impossible to believe. In fiscal 2023, Nvidia had $27 billion in revenue. By fiscal 2026, that number exploded to $215 billion. That's an 8-fold increase in just 3 years. Data center revenue alone went from $15 billion to $193 billion. So yes, if you missed 2019, you missed one of the greatest wealth creation events in stock market history. There's no point pretending otherwise. But here's what smart investors understand. Every era has its Nvidia, and right now, we're at the beginning of the next one. Let me explain what I mean. When Nvidia's chips became the backbone of AI in 2023, something else happened quietly. The demand for everything around those chips exploded too. The cooling systems, the networking, the memory, the power infrastructure, the optical connections between chips. Because here's the thing. You can build the most powerful GPU in the world, but if you can't cool it, connect it, power it, and move data in and out of it fast enough, it's useless. And that's exactly where the next opportunity is sitting right now. Let me show you 3 companies that are benefiting from Nvidia's growth even faster than Nvidia itself. Number 1. Broadcom, ticker AVGO. While Nvidia builds general-purpose AI chips, Broadcom builds custom AI chips designed specifically for individual hyperscalers like Google and Meta. And the numbers are extraordinary. Broadcom's AI semiconductor division saw revenue rise 106% year-over-year to $8.4 billion in a single quarter. And CEO Hock Tan has said the custom AI chip division could generate over $100 billion in annual revenue by 2027. That's almost double Broadcom's total revenue today. Analysts project Broadcom will grow revenue at 35% per year over the next 2 years. That's faster than Nvidia itself. Number 2. Micron Technology, ticker MU. Here's something most people don't know. Nvidia's AI chips are only as fast as the memory feeding them, and the specialized high-bandwidth memory that powers those chips is in a structural shortage. Micron is the only American company manufacturing this memory, and here's the jaw-dropping part. Micron's entire 2026 HBM supply is already sold out, including their next-generation product that isn't even fully in production yet. Revenue grew 57% year-over-year to $13.6 billion last quarter, and the company is guiding $18.7 billion next quarter, 440% earnings growth, yet the stock trades at just 9 times forward earnings. For comparison, most AI infrastructure companies trade at 25 to 30 times. That gap is the opportunity. Number 3. Marvell Technology, ticker MRVL. As AI clusters scale to hundreds of thousands of GPUs, the speed at which data moves between chips becomes just as critical as the chips themselves. Marvell owns that connectivity layer. Their fiscal 2026 revenue hit a record $8.2 billion, up 42% year over year. Data center products now account for 74% of total sales, and earnings per share grew 81%. Nvidia validated this position directly by making Marvell a key partner in its NVLink ecosystem. Now, let me be honest with you about the risks, because any channel that doesn't tell you the risks isn't giving you the full picture. These are not safe, boring dividend stocks. They are high-growth, high-volatility companies in a market that moves fast. Broadcom carries a premium valuation at 78 times earnings. Marvell's stock has surged significantly already, and Micron, while cheap on paper, operates in a cyclical industry that can turn quickly. The question is not whether these companies are risky, they are. The question is whether the opportunity is bigger than the risk, and right now, I believe it is. Here's what I want you to take away from this video. In 2019, the opportunity was Nvidia. Simple, obvious in hindsight. In 2026, the opportunity is the infrastructure Nvidia depends on, the memory it needs, the custom chips competing with it, the networking holding it all together. Nvidia's $5 trillion market cap is not the end of the AI story. It's the proof that the AI story is real, and the next chapter is being written right now by companies most investors haven't even heard of yet. Let me take you back for a second, because history has a pattern that most investors ignore. When Apple launched the iPhone in 2007, everybody focused on Apple. But the real hidden winners were the companies inside the phone. Qualcomm made the wireless chips. ARM designed the processor architecture. Corning made the glass. TSMC manufactured the chips. Every single one of those companies turned into a multi-billion-dollar business because of Apple's success, not despite it. Same thing happened with Amazon. When Amazon Web Services took off in 2010, everybody was buying Amazon stock. But the real infrastructure winners were companies like Nvidia itself, which sold the computing power behind AWS, and Arista Networks, which built the networking inside Amazon's data centers, and Amphenol, which made the connectors holding everything together. The pattern is always the same. The headline company gets all the attention. The infrastructure companies get all the money. And right now, Nvidia is the headline company, which means the infrastructure play is the one most people are missing. Now let me go deeper on each of the three companies I mentioned, because I want you to understand not just the numbers, but the actual business reason why these companies win. Let's start with Broadcom again. But this time, let's talk about why their custom chip business is so powerful. When Google or Meta designs a custom AI chip with Broadcom, they are not just buying a product, they are locking themselves into a multi-year engineering partnership. Broadcom spends years learning exactly how Google's AI models work, what data they process, and what speed they need. Then they build a chip optimized for exactly that workload. The result is a chip that performs better than a general-purpose Nvidia GPU for that specific task at a lower cost per computation. That's why Google has been using Broadcom's custom chips for over a decade, and that's why Meta just signed a major new deal to expand their custom chip program with Broadcom. Here's what that means for investors. These are not short-term contracts, these are 5 to 10-year engineering relationships that generate recurring revenue. And once a hyperscaler commits to a custom chip architecture, switching costs are enormous. You don't just swap out a chip, you rebuild your entire AI infrastructure. That is what we call a moat. And Broadcom's moat is getting wider every single year. Now, let's go deeper on Micron, because I think this is the most misunderstood opportunity on this list. Most people think of Micron as a commodity memory company. Buy low, sell high, repeat. Boring and cyclical. And historically, that was true. But high-bandwidth memory is completely different. This is not the memory in your laptop. This is specialized memory that sits directly on top of an AI chip, connected by thousands of tiny wires, moving data at speeds that regular memory cannot come close to matching. And here is the critical point. You cannot train a large AI model without it. There is no substitute. Every Nvidia Blackwell GPU ships with high-bandwidth memory. Every custom AI chip from Broadcom and Marvell needs it. The entire AI revolution runs on this memory, and Micron makes it. Their entire 2026 production is already sold out. Not mostly sold out, completely sold out. And their next-generation product, HBM4, is already being pre-ordered by customers who want supply locked in before it even starts shipping. That is not a commodity business. That is a structural supply shortage in a product with no substitute, and the market is pricing Micron at 9 times forward earnings as if it is still the boring memory company of 2015. That gap between perception and reality is exactly where investment opportunities live. And finally, let me go deeper on Marvell, because this one is the most technical but potentially the most important. When Nvidia builds a cluster of 100,000 GPUs for a data center, those GPUs need to talk to each other constantly. They need to share data, synchronize calculations, and move information back and forth at speeds that would have seemed impossible 5 years ago. The technology that makes that possible is called high-speed optical networking, and Marvell builds the chips that power it. On March 2nd of this year, Nvidia made a $2 billion investment in Lumentum, a company that builds the lasers inside optical networking systems. That is Nvidia telling the world that optical connectivity is not optional. It is the foundation everything else is built on. And Marvell sits right at the center of that ecosystem. Their chips are inside the networking infrastructure of every major AI data center being built today. As those data centers scale from 100,000 GPUs to 1 million GPUs over the next 3 years, the demand for Marvell's technology does not grow linearly. It grows exponentially. Because the more GPUs you add, the more connections you need between them. That is the compounding effect that makes infrastructure investing so powerful. You don't just grow with the market, you grow faster than it. You didn't miss it, you're just looking in the wrong place. Disagree with me? Drop it in the comments. Tell me which stock you think wins the next decade. I want to hear it. Subscribe if you want more real talk on where the real money is moving. No sponsors, no fluff, just the truth. See you in the next one.